Welcome to Common Sense Investing. My name is Cameron, and we're here for another Monday evening live stream talking about microcap stocks. That's what I enjoy. That's what I'm here to do. That's what I make money in. I absolutely love it. And it's done very well lately. We're going to talk about that today. We're going to talk about the market, how it moved from basically extreme fear, a bear market, into what we're seeing now for microcap stocks, which is, pretty good bull market at this moment. And we'll talk about opportunities that, have kind of already happened and maybe some opportunities in the future and what I'm doing for the summer. What are you doing for the summer? Is it investing in stocks or hopefully taking some profits and going for a bit of a vacation? That would be good as well. So as usual, I have a bit of a presentation for you, 20, 25 slides, something like that. Feel free to comment, ask questions, drop stocks in there that you want me to talk about. I'll try to, pay attention during the live stream to see if there's anything pertinent. But if not, as always, once my presentation is done, I'll stick around for 20 or 30 minutes and talk stocks, answer some, Q&A and talk about whatever you want to talk about. So I'm happy you're here, and hopefully it's been a good market to you, because it wasn't good like this very long ago. It's interesting that these are the types of videos that I was making February, March, April of 2025. It's only July. It's amazing how quickly things change, where just in February, people were talking about how the market was going to crash, the entire economy was going to crash. Oh my gosh, it was going to be terrible, and everybody sells stocks because they're not good anymore. It's amazing. Everybody becomes an expert. Everybody tries to predict what's going to happen. If we look at some of what was said, talking Liz Young here, Trump indicated that tariffs on Mexico and Canada will indeed go into effect, and China's rate was increased to 20%. Yield and stocks are lower. The dollar and gold are stronger. The market is signaling this is bad for the U.S. growth and even worse for others. If you remember times like these, Trump tariffs, this is all we could talk about every live stream. And I do love this comment here, where all of a sudden everybody became an expert on tariffs. But what was happening every day was the market was Red Dead Redemption. Again, this was not too long ago. Remember this? So this was Friday, April 4th. I said that maybe this is just an extended April Fool's Day from the April 1st. Only 4 more points to go. Paul Andriola is saying the fear and greed index on April 4th was 4. I could not believe it. I always laugh when this types of things happen, because back when COVID hit, the index hit a fear and greed index of 2. Right? This is a global killing virus, is what they were telling us, created in a Chinese lab, right? That was terrifying. The world shut down. The fear and greed index hit 2. And yet on April 4th of 2025, we hit 4 based on some tariffs, right? That's basically what happened. I was making videos, and the good news is that I have receipts talking about how there's opportunity and volatility, and trying to keep everybody motivated to at least research and keep microcap stocks on their watch list, waiting for a rebound. And of course, saying that this happens so quickly. We've seen this before. We can go from a bull market to a bear market very quickly. Be very skeptical of analysts' predictions on macroeconomics, saying that it's basically the end of the world and fear and greed index going to the bottom. Basically, I love this quote from Peter Lynch. Basically, everybody has the brain power to make money in stocks. Not everyone has the stomach. This gives me hope that investing in microcap stocks, especially in the future, isn't just going to become all about quant investing and letting AI pick our stocks, because there are certain human elements to it where you can create alpha, basically, right? There's times where if you can make the right decision as a human, you can make a better decision than an algorithm, and maybe buy stocks when everybody else is afraid. Here's a few screenshots from some of my videos, which is always nice and challenging on my channel because everything's recorded. So I have receipts of everything I do or say. And again, this was back on a live stream of mine from April 6, 2025, talking about my advice: turn off the news, focus on individual stocks. There's some well-managed, profitable companies out there at very attractive valuations. So basically, turn off the news, ignore all that noise, and focus on the stocks. You know, Ian Castle was saying the only people who buy the bottom are people who are buying stocks. And that turned out to be brilliant. You know, some of these microcap stocks rally pretty quickly. It's really hard to sometimes time the way up because they can go up 10% a day for basically every day in a week. And before you know it, it's gone from being an attractive buy price to basically back up to fair value. And that seems to be what happened to a lot of stocks basically in June, right? Very quickly, stocks recovered. So a lot of people who were simply buying the fear back in February, March, and April without really thinking about it, just focusing on the companies, have done really well. And then, of course, a lot of Ian Castle in this video today, I guess. But basically, it's interesting when you look back to those times. How do you feel about February, March, and April now, right? You know, it seems like every time, like Ian says, whenever you experience a drawdown in microcap stocks, everybody panics. It feels like an outlier event. I could not tell you how many people told me this time is different. Every time something bad happens in the economy, the fear scale goes down to just extreme fear. And every time dozens of people say, yes, but Cameron, this time is different. And if you had believed that, you would not be invested in any of these stocks rebounding today. And people called me crazy. What are you doing? You know, the markets are going to crash. Get out of stocks. And here we are right now. So 78, extreme greed. And I have been making a lot of money in the month of June. I hope you have been too. So I'm going to talk about a few stocks and a few other things in this video in the remaining slides that I have. And because I'm talking about specific stocks, don't forget, not a financial advisor, not your financial advisor. I don't know anything about you, your risk tolerance, what kind of capital you're working with, your long-term goals. And believe me, you really need to know that before you invest, especially in microcap stocks, right? Like just simply knowing whether you're investing $1 million or a couple $1,000 can completely change the way you're investing in microcap stocks. So nothing in these videos is financial advice. This is simply me talking about how I invest because it's good to get communication out there. And when we talk about good communication, again, seems like a lot of Ian Castle in this video, and I don't mind when the advice is, you know, something I could talk about here today. The best part of public markets investing is variable pricing. Almost every year, the market will give you an opportunity to buy more of what you love, 50% off the highs. It always feels like you will never get another chance, but you will. So it is fascinating how many companies, how good of a market we had in 2024. 2024 was an exceptional market. Everybody was rocking their 2024 year-end portfolio up 50%, 70%, 100%, whatever people were in microcap stocks. 2024 was a fantastic year. And everybody thinks I'm never going to get another chance. All the companies I researched, all the companies I like, simply went up too much. Well, enter in 2025, right? Trump, love him or hate him, has given another opportunity there a few months ago in some of these stocks, and Ian Castle was right again. There is a time value in accumulating knowledge on a position. A new opportunity can't have similar upside to an existing position. It must have considerably more upside to replace the trust in what you already own. The best place for new capital is oftentimes in an existing position. And that is interesting too, because especially when we get into, you know, a bull market, when you want to deploy capital quickly, or when we get into a bear market where you want to stay in only the companies that you fully believe in, that you fully have trust in. It's a fantastic quote because despite this channel, Common Sense Investing, introducing you to one new stock per week on the stock market, You know, it's amazing how many times on these live streams you will get absolutely sick of me because I'm talking about the same companies over and over and over. And that's simply because sometimes the best place for new capital is an already existing position. It's nice to put some of this new stuff on our watch list, or maybe open a small position on it and see where it goes and continue our research. But typically, you know, it's the stocks that we've already researched, that we've known for a while, that we know inside and out, that are some of the best opportunities. So unfortunately today, I'm going to talk about a few of those again, because one of them, of course, one of my highlight stocks has been Kraken Robotics, that I've been covering since below it was 30 cents Canadian, and now it's above $3 consistently. So it's consistently over a 10x stock now. And they just closed, I believe today, July 7th. We all knew they did the $100 million financing. It closed at the 15% oversubscribed option. So it closed with $115 million. Cash is heading to Kraken Robotics. It's interesting because, you know, a lot of people talk about share dilution is bad and I don't like financings. But I was telling people this is just a good thing to use this cash to shore up their balance sheet, to get more institutional ownership of Kraken Robotics. And now what are they going to do with this cash? And this was done back at $2.65. If you'll remember, the share price dropped here. It was, I think, $2.80, $2.90, something like that. It dropped to $2.65. Ian Castle, right again, right? Kraken Robotics gave people an opportunity to buy it cheap, because that public offering, bringing the price down to $2.65, has created a lot more trust, a lot more interest in Kraken Robotics, is now back up to $3.16. And if you look at the opportunity that we've had, again, just looking at that recent extreme fear down to about 4 that we had, February through March, you could buy Kraken Robotics at around $2.25, pretty reasonable. This is $2.25 right here. There was multiple times when Kraken Robotics was down around this $2.25 mark, and it even went lower. Right now, that's up 40%. That's 40% in just the past 4 months for Kraken Robotics. Congratulations to people who bought there. Talking about share dilution, NTG Clarity Networks, again, today. Today is just the day of dilution, right? July 7th, NTG Clarity announces brokered life offering for up to $5 million. They just did a life financing, what was it, 6 months ago for $5 million? And now they're doing another one for $10 million. I like it. I know a lot of people won't like it. Here's, you know, $2 right here. They've been up to as high as just about $3. But I mean, they're doing their financing down around here, and their warrant is up here for $2.95. So let's take a little bit closer look for NTG Clarity Networks. Keep in mind, they still have about $8 million of debt that they owe their CEO, right? So this $10 million will help out quite a bit, as well as it'll help them grow into their growth, because they're still a high growth company growing at about 50%. $2.20, which is where the financing is being done, is on this blue line right here. And their warrant that they set for $2.95 is up here. I know not a lot of people will say this. There's probably going to be some hate in social media for NTG Clarity Networks doing another financing so quickly. I honestly think it's smart. It's July. This is the quiet period for stocks typically. Everybody knows that people really don't get excited about NTG Clarity Networks until about Q3, when they start trying to estimate what their full year audited numbers are going to be. People love the audited earnings of NTG Clarity Networks, and then they announce guidance for 2026, and then they talk about how exciting their Q1 is going to be. Like basically Q4 to Q1 is when NTG Clarity Networks gets really exciting. So for them to do a financing before their Q2, this is going to sap up some of the buying pressure on the stock. We're probably going to see a few months where this stock just won't be able to go up, because anybody who wants to buy this stock is going to be able to get in at this financing. But at the same time, for NTG Clarity Networks, if you think about it, if you bought at $1 and you sold NTG Clarity Networks, say you had $100,000 in NTG and you sold $50,000 of your position at $2.65 up here, and you're now left with half your position in NTG Clarity Networks. Would you want to rebuy back half your position at $2.35? Probably not, right? Now, would you want to rebuy your half position at $2.20 with a half warrant at $2.95? I think that's pretty attractive. I think this is pretty smart to get some investor interest back into NTG Clarity Networks. People that sold part of their position at a price closer to $3 might want to buy back in. People who are new to the stock, who looked at the price and thought, it's too high, I missed the boat on this one, I'm going to go look at a different stock, all of a sudden might come back because they can get into NTG Clarity Networks at $2.20 with a $2.95 half warrant. I think that's pretty good. I know people will complain about dilution. Considering it's the middle of July and a boring period in the stock market, I think that's pretty smart for NTG Clarity Networks. McCoy Global, you talk about, some of these stocks coming back to the same stock over and over. How many opportunities did this one give us? Because it had really good Q1 results right here after reporting really good Q4 and end of the year results right here. So they had two absolutely fantastic earnings. There was no reason for this stock to do anything but go up. That was what was expected. And yet, if you look at the opportunity that the market gave us in McCoy Global, between February through April, McCoy Global was trading for around $2.60 Canadian. Since that price, it's up 65%. So in 4 months, and this is a bit longer here, like it was down $2.60 is right here. Started back in December of 2024, right? And we had that price, thanks to this wild up, down, had that price all the way through to almost the end of April. So we had basically just about 5 months of McCoy Global sitting at or around $2.60 Canadian, now sitting at $4.33, up 65%. So sometimes we're looking around for new opportunities, and sometimes the best high quality opportunities are just sitting there right in front of us. Another one, obviously, Zoom Technologies, right? Q1, strong Q4, the exact same as McCoy Global. They even provided guidance for Q1, so we kind of knew what Q1 was going to look like anyway. And again, you look at the opportunity. Didn't give us quite the opportunity as McCoy Global did. Basically, between March and April, for about 2 months there, you could buy Zoomed at around 75 cents Canadian or lower. This blue line here is 75 cents. So there's quite a few opportunities where you could buy Zoomed for 75 cents or lower. I was probably part of that problem. I think I released a Substack article warning people. I forget if it was here or if it was here, basically saying, look out for tariffs because tariffs could hurt this company. The company then came out and refuted my claims, basically saying we have ways around the tariffs. And then, reasonably and rightly so after that, and especially after they proved that in their Q1 earnings, the share price has gone up significantly. So people who bought Zoomed at 75 cents or lower, already a double or higher. So congratulations. Again, some of these stocks that I've been talking about for months and months and months now, because I've been covering Zoomed for a long time. You look at some of the new opportunities, but sometimes it's some of the older opportunities that give you that chance to buy back into them. So when we look at these quotes again by Ian Castle, absolutely brilliant, absolutely worked again, right? Now, this isn't always as easy as it seems. It always looks easy in hindsight, but keep in mind on all my videos and everything I do, everything is really just a balance of reward potential versus potential risk. That's basically how I invest and how I make all my decisions in the stock market. It's similar to poker is what I compare it to. So don't forget, when I introduce one stock in 10 minutes or less, this is something that we need to look at, balancing the reward potential over the risk potential. And one of the ways I find, I kind of laugh at myself, I could tell when we're in a bit of a bull market because I'm reaching. You know, you look at my recent videos, they're not a McCoy Global, they're not a Kraken Robotics. You could see here in all my recent video titles, I'm talking about a tiny nanocap, a surprise company, a tiny Canadian stock, a $5 million market cap Picocap stock, a tiny microcap stock, starting to look like a real business, meaning that it wasn't looking like a real business before. One of the things you'll notice, I can always tell when we're in a bull market because my videos seem to be reaching a little bit more into the high risk bucket. Smaller companies, higher risk, less proven, right? And when you see the common sense investing videos do that, you definitely know that we're in a bull market, right? So it's interesting. If you see us in a bear market, you'll see some of the quality of these companies go up. You will not see these tiny little pico caps and nano caps kind of show up, right? You get stocks like McCoy Global. So it's interesting, but some of them are still pretty good. Sanuwave Health I introduced here at roughly $27 American on June 6th. That was really good timing. That was in here. They're back up to about $33, so that's about 20% gains. You know, some of these other ones, Neuraxis has done nothing like I expect. If Neuraxis is going to do well, this is probably in 2026 when their Category 1 insurance coverage kicks in. So some of these stocks are boring, waiting on news, but give it time. Like I say, I'm never making these videos for my health. If there is a video on the channel of Common Sense Investing, it's because I think there is some potential in them, such as Total Telecom. It's interesting that I'm happy here again. Pretty good timing. I made my video right in here. It's looking like Total Telecom is getting a few eyeballs. For the first time, we're getting a little bit of extended green. It's nice to see a little bit of interest in Total Telecom. But essentially, at the end of the day, what am I looking at right now? What am I doing right now? We've been in a bull market now for all of June, a little bit of July. Too soon to get worried yet, but I mean, this is a video recording on July 7th, and basically what is happening is that Trump is starting to talk about tariffs again. So I do wonder if, you know, the bull run is starting to come to an end just a little bit. I'm not saying it has yet. It's only been one day, but I'm starting to get the feelers out there that, you know, if Trump is going to start talking about tariffs and limiting trade again, that, you know, we could get a little bit of a slower period. The other thing, of course, being that one of the questions in here, can you talk about why October and November are the best times to buy microcaps? This is a common saying in microcap stocks. It's funny that I had a slide already built here to start discussing it, but typically a lot of people say sell in May and go away. And you look at the returns in the S&P 500, from May to October, and they're typically a lot lower than they are from November to April. Now, one of the things that has changed this year is that Trump pushed this back. So typically what should have been our bull run, basically from, you know, January to kind of May, was pushed back because of all the Trump tariffs and trade issues. There was supposed to be a bull run here. Everybody was getting kind of depressed because if we miss this bull run, then we're probably not getting another one until the fall or winter of 2025. And instead, that bull run seems to be just pushed back into June and hopefully July. So what that means for the rest of the year, I don't know. But at this time, I'll tell you two things. One of those things is that I always stick to my investing strategy, which is, you know, building a thesis, buying a small position in a stock, and then as I see the inputs come in, I evaluate that thesis and then decide to either buy, trim, or sell that stock. And through this, I either end up building a larger position or selling entirely. This is all the time. This is what I do. I'm pretty consistent with this, and this is why I tend to revolve between having about, you know, 12 stocks to 25 stocks, depending on the market, depending on the quality of the stocks that I'm finding, and depending on the inputs that are coming in. So I try to keep it easy and simple in my investing strategy, and it works for me. The other thing is I might take a bit of a nap. I do expect that the bull run that we were supposed to have kind of January through May We got it in June. Maybe we get a little bit more of it in July. We'll see. But I am getting the sense that summer is here. Things are slowing down. We're starting to get some tariff and trade war stuff in the news again. Government seems to be on a bit of a vacation. I am thinking, or maybe I'm just hoping, that July and August and maybe the first part of September is a little bit quieter, and then once we get into the fall, things pick up again. Now, if we go on a major bull run or continue this major bull run, I'm definitely not going to complain, but I am starting to get the first kind of signs that the market is kind of going to sleep. People want a bit of a summer vacation, and things are slowing down. It's a great time to go back, look at your portfolio, do more research, make sure that you're owning the best stocks into what will be probably the next bull market later this year, and maybe getting rid of some of the stocks that you don't want anymore. Now, to continue researching these stocks or talking about these stocks, commonsenseinvesting.ca, where you could find everything related to common sense investing and do more research on finding the best microcap stocks and talking about these stocks that I talk about on these live streams every day. Every day, basically, we're in there talking about stocks. So that is the end of my presentation. Thank you so much for watching. I will be heading down to the comments section. What do you got for me? What are we going to talk about today? What stocks are you making money on? What stocks have you excited? What stocks do you think you're getting out of? Is this bull run going to continue? Where do you think we're going in the markets? Whatever you got for me, I got a little bit of time. I'm actually a little bit shorter than usual. This is only a 27-minute presentation so far. Lots of times I ramble on for 35 minutes or more. All right. What do we got here? Letting it all ride and planning a vacation for the fall. That's an interesting strategy, letting it all ride. Right now, can't complain with that. Everything's been going up, up, up. If people had listened to sell in May and go away, holy shit, you would have missed out, right? Like, if you were following that sell in May and go away, you missed out on all of June. June has been an absolutely fantastic month. Can you talk about why October and November are the best times to buy microcaps? Two reasons. Well, probably more than two reasons, but two of the main reasons for me is, and I'm not sure about October, November. I would suggest for me, late October through to about mid-December for me is the best time to buy microcap stocks. Number one is you get tax loss season. And what you'll see is that people need to balance their taxes during that time. They need to get ready for the year-end taxes. So what you're going to do is probably trim or sell some of your winners to take some capital gains, and then you want to sell or trim some of your losers to recoup some capital losses, and hopefully you meet somewhere in the middle, you balance off some gains with some losses, and you're not paying as much tax. So what you see during tax loss season is some of the really good companies that have gone up a lot, people will trim those and price will come down. So you'll see some really, really good companies in November, in December. They tend to come down in price as people are taking their capital gains out of the stock. And what you'll also see is some of the losers, if you think that they have hope in the future, those will come down too. So you get good prices on some of the best companies, you get some good prices on some of the higher risk stocks. And if you pick your stocks carefully at the time, have all your research done and ready to go, waiting for October, November, and December, sometimes you get some really good prices on some really good stocks. So opportunity and volatility, tax loss season is one of the most volatile periods in the microcap market. The stocks are going up, stocks are going down. Sometimes they're going up or down on no news whatsoever. It's simply a large investor has decided that I'm selling this stock for capital gains, or I'm selling this stock for capital losses, and you get high volume and share price movement. So opportunity and volatility, that's one of the reasons. The second reason is, again, you get the opportunity, if you've done your research, to get ahead of the crowd for Q4 and end of the year earnings. So a lot of companies report Q4 end of the year earnings and then Q1 earnings. We're talking, January through May. A lot of the times, March, April, and May, you'll see a lot of microcap stocks reporting Q4 audited earnings and then Q1 right after. So when we're dealing with these high-risk microcap stocks, a lot of investors prefer audited earnings. It's harder to hide stuff, right? So if you get a high-risk company, you don't fully trust them, you might wait until audited earnings. So really the bull season for microcap stocks is usually the Q4 and the Q1. It's where there's a lot of press releases, a lot of good news, a lot of bad news, a lot of earnings. You get Q4 and Q1 usually in about 2 months. So there's a lot of activity and a lot of investors spending time looking at microcap stocks. But if you do your research and you have better projections, you know the company inside and out, and you can maybe predict that a stock is going to have a good Q4 and a good Q1 before the market realizes they will. And if you could buy that stock in October, November, December, before the rest of the market realizes how good their year is going to be in March when they report it, that is a potentially huge time for some of the best microcap investors to make the most amount of money. It's interesting. I don't show it here. I probably should again. I can make a video on it, but it's fascinating because if I show you my year-to-date returns from January 1st, 2025 to today, they will not be reflective of my portfolio because I didn't buy any stocks on January 1st of 2025. I bought all my stocks back in November and December of 2024. And if you look at the returns year-to-date 2025 and the returns just adding on those 2 months, going back to November of 2024, my returns go from just a little bit to a lot. And it's because if you're paying attention and you could buy the best companies in October, November, December, there's usually some pretty good deals to have. So those are the two main reasons why that time period is one of the most bullish times for microcap stocks. What are your thoughts on CCOM satellites? They had another bad day today, even though I have seen no news. Look, I'm pretty much out on them on CCOM, right? Things change. I don't even know that I'm going to provide any coverage. What are they at here, right? CCOM Satellites was a company this is a hard company to find because they got like a weird hyphen in between their name. So I'm not even sure if I'm going to be able to find them. What's their ticker? CMO? No, it's not CMO. Okay, I might not be able to find it. CCOM Satellites is a company that is producing a flat satellite receiver that's tiny, and it's supposed to go on trains and planes and everywhere else in the world instead of those big giant satellite dishes. They've been developing this receiver now for years and years and years, and they've always been talking about we're so close and we're almost done and we're going to get there. And it's like they've now been beat. I mean, Tesla offers their little mini-link systems. There's other companies offering all kinds of different satellite receivers out there. So I just feel like they were beat to the market. They used to pay a dividend. I think they removed that dividend because they're now planning to invest in growth into this receiver that they built. But have we seen the growth? I mean, I would need to take another look, but I can tell you one thing that I haven't even really looked at CCOM Satellites for about 4 months, because a while ago when they removed the dividend, they said we're going to invest in growth, and I just feel like it was too little too late. They really needed to release this thing a year or two ago and have a chance at winning some market share. And at this point, I just think that I'm not very bullish on them at all. So I wasn't able to look up the ticker because I forget what it is at this point of the. I haven't researched them in so long. I forget their ticker, but definitely not a company that I'm really interested in right now. October, this is one of the most peculiarly dangerous months to speculate in stocks. The others are July, January, September, April, November, May, March, June, December. That's basically the whole year, right? If you listed out 12 months there, I mean, look, microcap stocks are volatile. I don't like the setup right now that we're going into in the summer. Like we're going into, we have a bull market in the first week of July. I've never really seen a bull market in microcaps in the summertime. So it's hard for me to maintain that type of positivity. At this point, I'm putting a high value on cash. If I feel like something is overvalued at this point, I'm probably going to try to de-risk and take some more cash. And as always, this is the time of the year where I spend July, August, September, and October doing my research so I can buy my favorite stocks in November and December when other people are potentially selling them and giving me a nice discounted price, right? So definitely there's a lot of volatility, but I wouldn't agree with you that right now it's a very scary time with Trump talking about tariffs again. Valuation on microcap stocks are pretty high. We're in a high risk period right now. I'm wishing Planet Microcap was happening in Vancouver this year. I missed out last year. Are you thinking I'd like to go in person today? Look, I recommend it. So I am going to, it's pretty much 99% confirmed now. I'm going to Small Cap Discoveries in Vancouver, September, I think 29th and 30th. Or is it 30th and 31st? Somewhere in there. The end of September is Small Cap Discoveries in Vancouver. I will be there. I'm actually planning on doing a video series showing what microcap investors should expect from these events. So I expect to do like a little bit of a live stream or maybe different videos showing you what an event looks like, why microcap investors should go to these events, what the advantages are. So I'm really looking forward to that. Planet Microcap also has an event this fall in Toronto. I won't be going to that one. I am hoping to be at next year's Planet Microcap in the spring of 2026 in Vegas. So fall, Vancouver, Small Cap Discoveries, spring in Vegas next year for Planet Microcap. And that's my plan. There it is, CMI. What was I thinking? CMO or something like that? Thank you. What a frustrating. I always hated, even when I was researching CCOM, finding that ticker because they put that hyphen in their name just drives me absolutely nuts. Yeah, $1 trending down 20% over the year. I mean, is there any reason to argue that for a company that has now, what did they have? A 3% dividend? They took that away. And what has their financials been doing? Probably nothing, right? We switched to quarterly. I mean, declining growth here, 698,000 in their February report. I mean, that's not attractive. They've been declining revenue, I'm sure declining earnings, negative 1 cent on the year. I mean, my question is a lot of the times when we're looking at a stock, I always say it reminds me of my toddler. When my kid was like 3 years old and was like learning to talk, was it around 2 to 4? Everything was why, Dad, why? That's me sometimes when I'm investing, and it's annoying to people. But why would I invest in CCOM satellites right now, even at the lower price of $1? They have a product that's going to beat out a bunch of other companies? I don't know that they do. Do they have the capital to really outmarket a bunch of other companies? I don't know that they do. Have they really executed on any of their promises? No, I don't think they have. Do I have an insane amount of trust in the CEO because everything he's told me has come true in the past couple of years? No, not really. Like when I ask why would I invest? I could list probably 20, 30, 40 companies that I would have interest in more right now than CCOM. Unless there's something brewing in the background that I don't know about because I haven't been looking at this stock in the past little while. But the reason they've gone down 20% slowly over the past year is people like me just slowly trickling out, right? Gatekeeper is going to pop once they announce the contract we know they have approved by the transit board. No, they're not. Are you crazy? Hold on here. I'll bring up Gatekeeper. So here's a fun one. Gatekeeper is going to pop. Gatekeeper has popped, right? There's nothing saying that Gatekeeper is going to pop further. Keep in mind right now, Gatekeeper is a $131 million market cap company. I'm super happy with their success. What was their revenue here? 33 million over the past 12 months, something like that. 31 million. Trailing 12 months, 31 million, down from 37 million in 2024. So let's go with their 37 million in 2024, and they are now a $131 million market cap company. Everybody knows about that transit authority contract if it comes. I'd be more worried about the board of directors doesn't sign off on it, and that would be a huge crash to the share price. I am super happy for Gatekeeper Systems. I have been covering them since 20 cents. But no, I don't think they're going to pop. I think they've already popped, right? Now they have to prove they can execute because they've had all these small contracts coming in. They've been awarded this large contract, but when is that revenue going to actually start getting delivered to the company? Probably not for 6 to 9 months. So people at this high share price are going to have to be patient. I'm not sure that microcap investors are really good at being patient. So what do I think about Zoom Technologies? Not sure what the question is specifically. I mean, it's a good company. I've made an absolute shit pile of money on them. I have trimmed some at around the $1.50 Canadian level. Not because, I necessarily wanted to get out, but when you're up, 3-4x on a stock, it gets to be too large of a position in your portfolio. So you have to do some natural portfolio balancing. It's still relatively cheap at what is it, about 9 to 10 times earnings or something like that right now. It looks like there's possibly some trade deals coming in for China at some point. So look, everything seems to be going in Zoom's direction. I definitely took some cash out of Zoom to de-risk my position there because at the end of the day, it's still a high-risk stock. This is still ad tech. Ad tech is cyclical. One of the things that I challenge anybody out there, ask yourself again, I just had this long rant about, why are you investing in this stock? Why are you investing in Zoomed? One of the interesting things that I continuously find about Zoomed is find me an investor that really knows what they do. What does Zoom do? How do they do it? There's maybe 5 people out there that seem to actually know that answer. Everybody else has no idea, including myself. I don't fully understand it. So I like the company. I like the management. I like what they're doing. I like their future potential. I still think it's a good company. I still think it's potentially a good stock, although its valuation is definitely a lot higher than it used to be. But do not ignore the risks, right? This company, this stock still has risks, mostly in that it's a highly competitive cyclical industry, ad tech. You're battling tons of other companies out there for every dollar. And that's something that we have to pay attention to. Itifos, yeah, I talked about once, reminded you about one time, is up huge and still a 4 PE with new mine extension opening next quarter. It continues to sleep. Congratulations. I like the company, Itifos. The difference between Itifos and other mining companies is they actually are an operational mine with revenue and growth and profits, and I can get behind that. And that's why I did make a video on Itifos. One of the things I don't like about the company is it is a mine. So one of the things you'll notice, and maybe it's a bad, comparison, because we just saw, a stock like Gatekeeper Systems go up quickly and unannounced. But one of the things that I tend to notice in some of these, if it's going to load, doesn't seem like it's loading, is they go up quickly. Like you hold on to these stocks for a long time and they don't make you any money, and then all of a sudden they just kind of shoot to the moon. And I'm not super patient about that sometimes in resource stocks. So I'm definitely happy for them that they've recovered and, looking like they're going to potentially set another all-time high for themselves. Good company, mining company that's making revenue and earnings. I love that, but I'm not huge on resources and commodities. That's just typically not my investing style, but I'm happy it's doing well. I've done well in OGO, Organto Foods, the last couple of months, bought for 13 cents a share. Now it's 55. Congratulations. That's what we're here for, right? These microcap stocks, just 13 cents to 55 cents. That's stunning returns. That's a lot of cash in your bank account. Absolutely fantastic. Have you looked at Tornado Infrastructure, TGH, Tornado Global Infrastructure, TGH.V? Do you have thoughts on it? Yeah, I made a video on them at, were they $1? They basically doubled at this point. I have given up on them. One of the things with Tornado Global Infrastructure is they're not very retail friendly. I've spoken to them. Sorry, I've spoken to myself and probably about 4, 5, 6 other investors who have reached out to the company with questions, concerns, comments, wanting to chat, wanting to talk, just to connect in some way to the company. Do you want to do a CEO interview all the way down to, hey, I have one question. Can you please answer my one question? And we have received no responses. There's been no communication that I'm aware of from TGH to retail investors. I really can't get behind that. The company has been extremely successful. Their financials have been doing well. So you can look at this as a huge success story as far as, you know, this is what you can do as a company if you get continued growth, you don't dilute your shareholders, and you just focus on the company. At the same time, it's pretty hard to get excited about a company. I don't know what their future looks like because I've never spoken to management. They don't do earnings calls. They don't do interviews. If the CEO walked, you know, in front of my house right now and waved at me, I wouldn't even know he was the CEO of Tornado Global Hydrovac. So I'm happy it's done well. I made a video on them at $1. I think they're damn near at $2 at this point. I saw the potential in them, but I did not like that they have zero communication with retail investors. So just isn't a company that I can really get behind. I'm not mad at them. It's just I really can't, you know, support that, right? When I can't get my questions answered. What about AEP? Well, I mean, AEP is a housing construction stock that does prefab construction. So instead of like building houses, Atlas Engineered Products builds mostly trusses, but they're also getting into like wall units and floor units, and then they deliver those to the site. Now, one of the things is that AEP, just outside of this graph, they went up to like $1.65 or something like that. That was an insanely high price for this stock. I was telling people at the time I couldn't get very bullish on AEP up at these prices because I knew that the housing starts in Canada were really, really, really shitty. So I'm not sure how you would get excited about a company at a very high share price when basically their entire industry is sucking. And I was basically right. Share price has gone down. Absolutely no fault to the company, but earnings after earnings after earnings have been weak because the entire industry is weak, that we are not building houses in Canada. Recently, there's been some hope that there has been some turnaround in Canada for house construction. We had our election. We have a new government. Love them or hate them, it does bring some stability. And, you know, share price of AEP was down here. They hit what, about 72, 73 cents? 72 cents right here was their low for the year. They are now back up to 93 cents. So there is some hope from investors that, you know, we have seen the bottom of housing starts in Canada and they will improve from here because they almost have to, right? We have such a housing shortage that if we could actually figure out how to build houses in Canada, Atlas Engineered Products would probably be one of the best stocks on the stock market. They're set up for growth. They're set up to capture growth in the housing market. We just haven't seen that growth. So as of right now for AP, for people that have a long-term vision or for people who truly think that housing construction in Canada is going to improve from here, this is absolutely the stock for you. I don't know if I'm 1,000% sold yet that that's going to happen, but I do think that there's at least hope. It does look like we've at least seen a bottom in the housing market in Canada. Cities like Toronto and Vancouver are still struggling, but the suburbs and some of the smaller cities are seeing some growth. So there is some hope there for this stock. And look, great company, a lot of superb shareholders in small cap discoveries, And, it has a lot of potential in the future. It's a cyclical stock, and people who bought it too high ended up getting caught in the headwinds of the industry just going down. And the big question right now is, are those headwinds going to switch into tailwinds? TGH seems to be consolidating. Patience is key. Patience is key, and looking at the technicals might be key, because again, it's when I can't speak to management, it's really hard to know. How am I feeling about Symmetrix? Look, I posted, if you go look at my free article on Substack that I recently released summarizing the month of June, this is Symmetrix here, is me basically saying that cyclicals are working their way up. So Symmetrix, I like Symmetrix, or I did like Symmetrix. I was a fool, I think, who bought somewhere, I think right before this drop. So I bought my first little tiny starter position in Symmetrix right around, I think it was 33 cents or something like that. I ended up doubling down on Symmetrix right about here. So I am a shareholder at 20 cents. I think my dollar cost average is at this point 27.5 or 28 cents Canadian in Symmetrix. They're back up to 31 cents. Again, you see the same as Atlas Engineered Products, the same as ADF Group, the same as Symmetrix, the same as BioRem. We saw a lot of these kind of cyclical construction affiliated stocks just go down and down and down and down over the past 12 months. They all seem to hit some kind of a bottom here in February, March, April, like so many other stocks did. And now we're getting some movement up. The big question for Symmetrix is they changed their CEO. They switched out from Jeff to Randy, and we haven't seen what Randy can do yet. Q1 was weak. I think Q1 came out here in May. It was weak, and yet the share price still continued to go up because there is hope. They're saying through guidance that 2025 is going to be the best year in the company's history, is what their CEO Randy is saying. We don't have a lot of history of this, though, right? So I think a lot of people are watching to see if what their new CEO Randy is saying is going to be truthful and honest, whether he can deliver, whether he can execute on his promises. So I think Q2 coming up is going to be a big one for Symmetrix in building trust with investors, that what they say is actually what they're going to be seeing in the earnings, right? There's always that review of, what the company is saying and do they execute? Did they actually do what they were going to be saying? So right now, Symmetrix has been saying a lot of good things, everything that investors want to hear. This is going to be an improved year. This is going to be the best year ever. We're back on track. Contracts are rolling in. Do we see that actually come out in their earnings? That's what I think a lot of us are waiting for. Gatekeeper contract was approved. The MTA posted the board meeting on YouTube, and they all voted yay at the very end of the meeting for Gatekeeper's proposal. Gatekeeper is not officially announced it yet. That's fantastic. Good for them. Keep in mind, though, too, not trying to be negative, they were the lowest bidder at 28 million. I think they ended up with a 23 million contract, so they actually went $5 million under on the lowest bid. I wonder what the margins are going to look like. I would love for Doug to talk about that. Is it going to be lower margins, or is the contract smaller? Is that why it went down by $5 million from 28 million to 23 million? It's a good contract. Don't get me wrong. We've all been waiting for the next large contract. They finally got the next large contract. That's absolutely fantastic. But I mean, $131 million market cap, there's some more contracts than just this $23 million one built into the share price, right? Housing starts are set to crash. There's an 8-month supply of condos, the highest in 20 years. I'm not saying if you're saying that they're going to crash or they're going to improve. You're saying both in the same sentence. So, and look, it could be both depending on where you're at. I've heard, I'll be going to Vancouver soon. I'll get to look, but I've heard that nobody's building anything in Vancouver. But if you go to the fringes of Vancouver, there is some construction. they're building in Alberta, but AEP doesn't have facilities in Alberta. So I think depending on whether you think housing starts are going to improve, depends on how carefully you watch the numbers and where you live, because it seems like some places are starting to boom and other places are still stagnating, right? Thank you for the info. No problem. AEP management is weak. They wrote off $1 million deposit they got scammed from by an automation company. No organic growth. It's all coming from buying people up. Yeah, that's part of the business plan, right? Hard to say if I would call it organic growth. The plan was to get growth through the robotics, which they were investing in when the robotics company that they hired went bankrupt. Yeah, that does suck, but I mean, they'll get through it. And I thought people got too excited. If I'm going to fault anyone, I would have faulted shareholders for getting overly excited about robotics. So one of the things that we saw is that when ADF Group installed robotics, their margins improved, and ADF Group went from like a $4 stock to like a $20 stock. Their margins were stunningly improved, and their earnings, the bottom line, just kept getting better and better and better. The difference is that ADF Group has only 2 facilities. They put robotics in their largest facility. So basically they covered off like 80% of their operations by converting one operation to robotics. I mean, AEP has 10 operations. I'm trying to go from memory here, but it's probably around 10 different operations. So their plan was to install robotics in 2 or 3 of these operations. That will help, but it's not quite ADF Group. It's going to take time for them to get that organic growth through installing robotics and improving margins. But yeah, they are a roll-up strategy. Their plan is to produce enough cash to buy up other people in their industry. Yes, that is their strategy. So I think, again, it comes down to the narrative. When times are bad, when everything's on a down cycle, when the share price is going down, I think management is weak. And you'll see once things turn around, once we see an upcycle and we see an improvement in Canadian housing, and once robotics are installed and margins are going up, you will be surprised at how quickly people will shift and be like, oh my God, management is the best ever, right? So any updates on how wildfires in Alberta are affecting any companies? As far as I'm aware, they're not. There's some wildfires here, especially up. I was worried about back in June, up around the Fort St. John, BC area, which is where Enterprise Group is working to provide natural gas to the new pipeline there. And there was quite a few bad wildfires. But as far as I'm aware, companies like Enterprise Group operate Alberta and BC, and there's been wildfires, but nothing that isn't regular, I think. So I haven't seen them in the news as being a terrible wildfire season yet. I think one of the problems, though, for most of the companies around here I'm not sure that it matters if there's a lot of wildfires or not. It seems like, or at least last year, what we saw is that a lot of companies in Western Canada scaled back their operations even though there weren't any wildfires, right? A lot of these companies now are simply planning for it. We're not going to operate during the season. We're going to give our people some time off. We're going to let them relax a little bit. We're going to do some training. We're going to do some maintenance. And I think we're going to see the same thing this year. I think some of these oil and gas, mining adventure stocks, Enterprise Group, are going to see some weak earnings here in Western Canada, because more and more companies are simply planning this downtime for wildfires. They're not waiting for the wildfires anymore. So I sold after listening to the conference call. Management sounds clueless to me. Any thoughts on High Tide? Bounced off the low end, still a bit underwater myself. Yeah, I'm still bearish on High Tide, and they're not changing my mind on that. I always felt that this was a simple business. They have brick and mortar stores in Canada selling cannabis. Those stores were doing wonderful. They were increasing their market share all the time by having the best stores in Canada and really providing a top-of-the-line cannabis experience for retail or for cannabis buyers. they seem to, I thought that was the very simple investing thesis for High Tide. I was really impressed. Just keep opening up stores in Canada, and this is a stock that I will want to own for a long time. And they didn't want to do that. I called it their mistress. They got distracted by their mistress in Germany or Europe, and they're chasing all these other cannabis markets in other locations. I get the impression sometimes they're just doing it because they want free travel, right? Like they're heading off to Germany and other places in Europe to potentially do some acquisition that never seems to happen. And they get all this travel while shareholders get a declining share price. But to me, what I saw in High Tide is they lost focus on their core business. So we started to see those brick and mortar retail locations in Canada for High Tide start to be slower to get profits, start to have weaker margins. The online sales business never succeeded, and they just seemed to be ignoring that and focused on other opportunities. So what happened for me with High Tide is it went from a very simple thesis, keep opening up stores in Canada, to I don't know that management has their eyes on the prize at all. Their prize is somewhere outside of Canada, super high risk. I don't know what's going on. So when a company goes like that from very, very simple and bullish for me to I don't know what the hell they're doing, it's really hard to get excited. Maybe it's a trade for me in the future, as if, you know, people start getting more confidence in them and they start going up. I think they're undervalued. I think they have the potential to be a much better company. That's why I was excited in them, but they haven't been. They haven't been. And so it's hard for me to support. I'm in construction. It's not a high conviction industry for me. See Peter Lynch. Yeah, absolutely. There's money to be made in these cyclical stocks, right? Symmetrics. If it's funny because if you had been invested in Symmetrics, ADF Group, and Atlas last year, all of 2024, you lost a lot of money, right? And if you just bought all three of these companies right around January, February of 2025, you would have made a lot of money. So you have to be aware of that, is that with cyclical stocks, this is one of the hardest industry niches, whatever the industry is, sectors of microcap stocks for especially new investors. Because if you time them right, you can make a lot of money. If you time them wrong, you lose a lot of money. If industries are getting bullish, if there's more construction, if there's more housing starts, if we're going to see that and we can get a 2 or 3 or 4 year upcycle, we can make a lot of money in these stocks. And you know, you're in construction, you're not seeing it right now, and stay away, right? But you definitely, it's harder because you do have to try to time those industries. Some stocks I try to time as far as what time of the year it is. When I think, you know, a stock's really going to get an inflection point. Like there's all these other things that we need to time, but with the cyclical stocks on top of that, we need to time the macroeconomics and we need to time the industry cycles. And that makes it a little bit harder, right? So be careful of cyclical stocks. There's a lot of money to be made, but definitely some risk. And if you don't like it, then there's a lot of stocks I simply won't invest in because I just don't like the industry niche. I feel like TrueBar could be a good short-term buy. We're almost guaranteed record results in August. Top line, that is. I would be comfortable if they were making money. Yeah, get on the bandwagon. I basically, in my Discord, what did we call it? The tapioca bandwagon. Their tapioca-fueled bandwagon of hope, I think is what we called it for TrueBar. Very polarizing company right now. You get some investors like the Wolf of Oakville and his group over there who look at some of the comparables in this industry sector that have sold companies that have made basically protein bars in the past, saying that, you know, TrueBar has potential to 3, 4, 5x, maybe more from here if they can continue to grow TrueBar and sell it, which is ultimately their goal, is selling their company. At the same time, recently, man, there's been a lot of people showing up pretty negative on TrueBar. It's funny because I used to be the only one. When the share price was going up, I was the only one who said, I like the company. I think the protein bars taste like shit and they're full of ingredients that I won't eat. And one thing that I notice now that share prices come down a little bit, there's a lot of other people out there who are saying the same thing and saying that the bars aren't very good and that sales are dropping. So I am fascinated to watch what happens in this Q2. I know the guidance is for 20.2 million in Q2. Can they achieve that? That would be huge growth. If it is, might be a good short-term trade. I think Wolf of Oakville is saying it's more of a longer-term bet that they get bought out. Yeah, INX, I do have opinions. I forget what that opinion is. InTouch Insights, this has been a stock that my opinion on InTouch Insight is if you go to my free Substack article series, I have my opinion for InTouch Insight in there. I don't remember what it is. One of the things I notice is that if I was writing on InTouch Insight, I was writing on them in here, and I don't remember if I was bearish or bullish on the stock. I don't know what's happened, but their share price is down. So my answer right now is I don't have any thoughts on them. I don't remember if I was bearish or bullish on this stock. I thought they were a slow-growing little stock, only a $10 million market cap, eh? So they didn't make my top 10 list in Planet Microcap, and share price is down. That's all I could tell you. Now, it's not always easy to make my top 10 list. There were 110 stocks that went to Planet Microcap in Vegas this year, and so it's possible they didn't make my top 10 list and they're still an okay company, but their share price is down. Sorry, I don't have any thoughts right now. Anything on Novaleap Health? Chris seems honest, but the business model doesn't seem to be scaling into profit. Seems like they lose customers, old people, patients as fast as they can get them. Yeah, no, I've said that for a while. I don't know if the wording is given up on Novaleap Health, but look, I love Novaleap Health. Their CEO, Chris Dobbin, amazing person, love the company, love what they're doing. This is one of those companies that if you are a shareholder, you can enjoy earning it because they really help people. This is a company that helps people with like dementia and the older generation of people that just need help but don't want to go to a hospital setting. And Novaleap Health provides health home care providers that go to your home and provide services for you. So an absolutely fantastic company. The problem is they're only as good as their growth, and they only get growth when they buy other companies. So that's hard to do. We just had that, commenter saying that that's basically what Atlas Engineered Products does, and that's true, but at least Atlas Engineered Products has potential of like getting robotics and reducing their manpower and increasing their manufacturing capacity. Novaleap Health has struggled with that. They basically buy up a home care center, they get that home care center, it never really grows, and then they now have to just pay off that debt until they can go buy another home care center and kind of rinse and repeat. And so I love the company, but it's really hard to get behind them as a stock. It just really hasn't done much. And that's tough for me to say just because I like them so much. But Emerita Resources, big catalyst with a court decision next week, EMO.V. Thank you for letting me know. I'm not big on resources, so I probably won't look at it. But if you think it's got a court decision, we've seen other stocks like that go up significantly if they can get a court win in their direction. And that can be a good catalyst. So good luck. I'm wishing you lots of luck with that. How do you tell if a stock is cyclical? Well, the industry that they're in construction, anything construction related. That's basically it. There's other cyclical stocks. AdTech sometimes will be cyclical on, when we get a recession, companies simply aren't willing to spend as much money on advertising dollars. But I mean, if you look at true cyclical stocks, you're looking at your home construction, your steel construction, your road construction, and it goes in different cycles. Like, for one example, road construction is typically more bullish when we're in a recession because to try to help get the economy out of recession, governments tend to spend a lot of money on road infrastructure. So it's interesting that when we get a recession, you know, some industries will cycle down and some industries will cycle up, and you just have to pay attention to that. But ask around, ask Google, and it should be able to tell you. Any hope for Legend Power Systems? Yeah, there's tons of hope for Legend Power Systems. I'll bring that stock up here. So Legend Power Systems has been disappointing, but I won't say that there's not hope. So this is a company that makes an electrical device that goes in a building, and it basically regulates the energy into that building. And so what I'm saying is that the energy grid nowadays is very up and down, especially due to renewable energies. So you start adding things like, you know, solar and wind and stuff to the energy grid, and instead of getting like this nice consistent flow of energy, you start getting, you know, spikes and troughs in the energy grid. And that can blow out equipment, that can blow out lights, that can, you know, ruin stuff in your building. And so Legend Power Systems has designed and patented this electrical component that goes in buildings to stop that, you know, save your elevators kind of thing, right? A lot of potential in that. The problem is there's been a lot of potential in that for a while, right? Like, and at some point, like I think I started covering them in middle of 2023. And I mean, it's, yeah, down, 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 down. People get excited again, down, 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 down. I mean, I'm starting to get frustrated. I went and listened to their last earnings call. Go listen to their last earnings call. It got me excited that at least the potential isn't gone. The company right now, it's my understanding, is now partnering with other providers who will be selling their product. So they've kind of given up on just selling their product themselves. They're now trying to go to these external service providers to sell their product to hopefully get exponential growth. And that's what we need to see. So when I went and listened to their latest earnings call, I still have hope for their potential. But hope for their potential is not good earnings, right? That is speculation and hope, and not positive, profitable earnings. They're not there yet. And at some point, all this hope and potential has to turn into profitable earnings. Otherwise, I'm gone. And I'm getting to that point, but you know, after the past earnings call, I listened to it. I took some notes. I have those notes put aside in my Discord. They have maybe 6 months to execute for me. Otherwise, I'm gone, because I'm tired of hearing about the hope and potential and not seeing the execution. So that's what I'm waiting for. That's my thoughts. Very speculative stock, though, right? If you go look, what everybody was hoping for with Legend Power Systems was something like Tantalus. The valuation on Tantalus. Tantalus does something similar, except they have a product on the outside of the house, and it helps the energy providers regulate the energy coming into places. And what we've seen with Tantalus is just this insane upwards movement, even though their earnings haven't been the best. People are getting excited about the company, excited about what they have to offer. There's a lot of potential for the future. And we're hoping for this same thing through Legend Power Systems. The thing is that it takes that inflection point of actually doing something and executing on your promises to get people to notice this stock. And once that happened with Tantalus Systems, I mean, other than a little few people taking profits and getting out here. But what happened eventually here with Tantalus Systems is once that potential was executed on and people discovered the stock, it's made shareholders a lot of money. So, I mean, would we like to see this from Legend Power Systems? Are we hoping that Legend Power Systems is right here somewhere and they're just, you know, 3 to 6 months away from this? I would love that. But I tell you, I've got them on a short rope, and I'm not giving them a lot of leeway here. VitalHub, I don't have a lot of information on VitalHub. It's been one of the most successful stocks here. Let me take a look here. Up 51% in the past 12 months. Here's the thing. You can't catch them all. This was a stock that I missed. I never provided coverage on it. I was never that interested on it. My mistake, I missed it. That's one thing you learn as a microcap investor. You don't catch all the winners. And this was a stock that simply got away from me. And now because it's up here, 639 million Canadian market cap, I'm not that interested. Myself, if this was a U.S. stock, a 639 million market cap U.S. stock on the NASDAQ, this would still interest me. But myself, I find in the Canadian markets, I try to stick with under 300 million. If it goes above 300 million, I'm really not that interested anymore. I think Tantalus is moving now because they're now receiving orders for their gateway product. Exactly, 1,000%. And that's what we need to see from Legend Power Systems. They have this amazing product, or allegedly amazing product, that's supported by the Department of Defense in the U.S. and the city of New York. That's the potential with Legend Power Systems. Their product is already being bought and paid for and used by the city of New York and the U.S. Department of Defense, and everybody's like, oh my God, if they could sell, it's called SmartGate, if they can sell SmartGate to those two locations, businesses, I don't even know what to call them. What do you call the Department of Defense? So one of the largest spenders of capital in the world. If they could sell SmartGate to the Department of Defense, they should be able to sell it everywhere. The growth should be amazing, and it just hasn't happened yet. So yes, Tantalus is starting to execute. They're getting orders for their gateway product, and we need to see Legend Power Systems get orders for their SmartGate product. Now, with these speculative stocks like Legend Power Systems, if they can start getting those orders, they can move like Tantalus. They can go up significantly. But, you know, it depends what type of investor are you. Are you the buy and hold patient investor who's willing to buy something cheap and take the risk? It could go to zero because you want to buy it at the absolute best price. Or are you the type of investor who wants to wait and see? And once they execute on their first larger contract or two, yes, share price is up, but the risk is down, and then I'll buy the stock, right? Microcap investing, I talk about this all the time. A big component of microcap investing is deciding what type of investor you are. Because even if we like the same stock, you're not going to buy a stock at the same time that I buy a stock, the same as investor A is going to buy a stock, the same as investor B is going to buy. We're all going to buy it usually at different times, depending on what type of investor we are. And I've seen that where you could take a stock, sometimes even a very successful stock, and depending on when you bought and when you sell, I have seen people take a successful stock and lose money, right? And some of the best investors, the GOATs, just simply know when is the absolute best time to buy and when is the absolute best time to sell. But really, you need to figure out kind of what type of and I'm not talking about you, Richard. I'm just talking about in general with people, right? I'm sitting there with your comment on the video, but no, I just mean in general as investors, we all need to decide what type of investor we're going to be. The buy and hold patient investor that's willing to take on that risk to get a cheaper share price, or wait and see if there's execution and buy later on when there's less risk. I do both. It depends on the company, right? It depends on the company. And that's where we're at with Legend Power Systems. But last chance, I'm an hour and 18 minutes into this thing, so this is getting to be a pretty long live stream. Any other questions, concerns, comments before Common Sense Investing hits the road? Ever looked at Ensign Energy Services? No. Again, depending on what my guess this is. So one thing to keep in mind with Common Sense Investing, myself, is that I am a investor in shovels. So in the gold rush, some people made money on gold. Very few. You were extremely lucky if you made money on gold. The people who made money in the gold rush were the people selling picks, shovels, equipment, other supplies, hotel rooms, beer, and other accessories. Right? Those are the types of money that people that made most of the money in the gold rush. So typically, what I'm looking for is companies that sell services into oil and gas. And so I might actually look at Ensign, and you might be right, because it says provides oil field services to oil and natural and gas industries in Canada. It offers shallow, intermediate, and deep well drilling. Nope, see, there we go, right away. I'm out. Not that interested in oil and gas drilling stocks. And because, again, it's investing in gold and not the picks, shovels, beer, or hotel rooms. So my apologies. Not saying it won't be a great stock. It's just we all have our niches, and there's a few industries that I simply won't go into. Biotech, like pre-revenue stocks for the most part. Speculative biotech stocks I won't get into. Omnilight, what's my thoughts? Yeah, Omnilight is another company I'm kind of getting a bit frustrated with. I've been trying to make my decision on this one. I think I am going to give them more time, a little bit more time. So this is another one, bit of a cyclical manufacturing stock. If you look in their past year, down, 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 down again. When did they bottom out? The same as so many stocks in this cycle that we've been having through 2024 and 2025, where they seem to bottom out right here with Trump tariffs and trade issues. They've been showing a little bit of bounce back. This is so similar to what we've been seeing in Atlas Engineered Products, in ADF Group, in Symmetrix, bottoming out here in March and April, and then just a slow little bit of hope going into, July of 2025. At the end of the day, $19 million market cap Canadian. They have $3 million US in cash. They own 7 million shares of California Nanotechnologies. I just wish they'd execute. I don't know how many times I could say execute in one live stream, but we've seen, I don't know why the earnings aren't on this page, but we've seen 1, 2, 3 earnings. The past 3 quarters for Omnilight have been disappointing, and that's why the share price has been going down. Like, we can argue that this is a bit of a cyclical stock, and the reason that the share price is going down is because most manufacturing stocks have been down in the past 6 to 12 months thanks to Donald Trump and all this tariff and trade issues. Contracts have been on hold. People haven't been spending as much money, so you can argue that's why share price is down. However, I would also argue because the CEO made a lot of promises and hasn't really executed in the past 9 months. There seems to be a little bit more hope recently that they are going to be executing. They are reporting their earnings coming up on or before July 29th. So earnings will be coming up. I am worried about these earnings because these earnings should cover, I believe, their Trump months. So do they have another disappointing quarter? Because their earnings is basically in the months that you don't want to be a manufacturing company because contracts were on hold? Maybe. So do we maybe have to wait another 6, 9, 12 months for Omnilight to really show what kind of potential they have and where this company can go in the future because they need to move away from all this Trump tariff fear? Maybe. How patient are you willing to be with this company? I don't know. I've been asking myself the same question. They've had significant success here through 2024. This was an amazing stock, but I will have to say recently it's been disappointing. Are we starting to get that little bit of cup and handle, just waiting for a breakout? To get a breakout, though, we need at least one good quarter of really positive earnings. Is that the earnings coming up on July 29th? I'm not sure. I hope it is, but I don't know for sure. I think they're going to get a positive earnings eventually. I just don't know if it's going to be this next one coming up. I hope it is, but I don't know for sure. End of the day, though, I like what they're doing. Good company, simple, safe, lots of cash, no debt, lots of assets, not a lot of liabilities in manufacturing of defense and aerospace. Omnilight should be a really banging stock. It was actually my number one stock pick for 2025 in the Nanocap category, I believe. And so I do like this company. It's just, when you've had 9 months of disappointing earnings, it's hard to get too excited. Boots, people who sold boots in the gold rush made a lot of money, made a lot more money than the gold miners. I'll tell you that. Not sure if you covered the financing advertised after hours for NTG Clarity. Yep, I mentioned it in my live stream. I like it. I think it's smart. I know people will complain and bitch about more dilution and look at this scam company. It's doing another financing. It just closed a financing 6 months ago. I think it's a smart financing. You know, they still have $8 million of debt. They're still trying to spend a little bit of money on growth. Let's be honest, this is a very boring time of the year for NTG Clarity Networks. Everybody wants NTG Clarity Networks for Q4. Q3, Q4, and Q1 is their bull quarters where people get excited about this stock. Nobody is getting excited about NTG Clarity Networks in July. So for them to do a financing in July, which is a really slow period, share price will probably stay low for a while because all the buying pressure is going to be sucked up by that financing, but it's really going to attract a lot more investors into the stock, I think. Because like I talked about, if you're an investor, you owned NTG and you sold at $2.65, are you going to be looking at getting into the financing and using those gains that you took at $2.65 to get back into the stock at $2.20 with a warrant, a half warrant? I think that's pretty attractive. And if you think you missed out on the company because it went to $3 too quickly before you could finish researching it, are you now willing to open a position at $2.20 with a half warrant? I think that's also pretty attractive. So as much as the dilution sucks for NTG Clarity Networks, not a lot of dilution. And I think that the payoff of getting that $10 million of cash, as well as attracting some investors back into the company, I think it's actually going to pay off. And you know that people are going to want those $2.95 warrants to execute. So I think my goal would be for NTG Clarity Networks sometime around Q3, Q4, Q1 in late 2025 or early 2026. I hope they hit $3 or higher. And that would be my expectations for this company. I feel like a sloth investor, very slow turnover. Whatever works for you. There's different investing styles for everybody. Whatever works for you. Some people are, a bit more traders. Some people, I'm not a day trader. I'm definitely not much of a trader, but whatever works for you. That's all I care about. Any thoughts on Now? You're talking about Now Vertical Group. Yeah, I like the company, but you have to remember it's hard for me. I bought it at 12 cents and 8 cents, and now it's 63 cents. It's been going up. I've been impressed. It's been doing very well. They still have some potential. I think people are forgetting that this company does still have some risks. Given the industry that they're in, and some of their debt positions, some of their dilution, that they've been using shares to pay off some of their debt and reorganizing some of their debt. There's still some risks here. I think people are starting to forget that. I'm definitely less bullish on Now Vertical Group at 63 cents than I was down here, right? It's interesting how many people are like contrarian investors, but they're not that excited about it. They want to buy a company up here after it's already kind of hit that inflection point and succeeded. I was excited about Now Vertical Group down here. Right here, I like the company at 63 cents Canadian. I'm not saying I don't like them. The thing is, I have to look around and say, is it really the best company out there for me? Is it the best stock out there for me? If you look again at the risk-reward balance, yeah, hard to say. It's not a bad company. It's not a bad stock. Can't really think of anything negative to say about them. It's just, I probably have about 10 other companies on my list right now that I'm probably a little bit more excited about. So that's it. I'm running out of voice. I'm an hour and 28 minutes into this live stream. So thank you. Really appreciate it. We had great turnout here for this live stream. Great questions. This was a long one. So many questions. Really appreciate it. Love the communication. Love the conversation. Love the debate. Love the opinions. Love people's different ideas. That's what we're here to do, right? Is share ideas, talk about these stocks. I'm not going to be right 100% of the time. That's for damn sure. All I do and say is this is my opinion, And I could be wrong, but it's great to talk about it and see where everybody else is at, see what everybody else's hat and head is thinking, and, get these conversations out there. So I'll see you in a week for next week's live stream. And I need to go figure out what stock I'm going to introduce to you over this week. I don't have anything planned yet, so I need to go find a stock from my list to introduce again. As always, you've been watching Common Sense Investing. Good luck out there. Hopefully we